Welcome to ForexTV.com. Today is Thursday, September 25th. I'm Kathleen Reddington with your New York Forex Market Buzz. And now for a look at the latest headlines from the CEP News Desk. President Bush said the entire U.S. economy is in danger. He also said that delaying the bailout plan now would only cost the government more money in the future. He warned that the U.S. stands to face a long recession. After the president's warning, a slew of negative economic releases came out this morning. New home sales took a big hit, dropping 11.5% in August to an annual pace of 460,000. This was a much bigger drop than expected. The month-over-month decline marks the largest drop since November of 2007, pushing the pace of sales to the slowest rate since January 1991. The median sale price of new houses fell 5.5% to its lowest level since November 2004. Durable goods also posted big losses for August, excluding auto sales. They fell 3%, which was despite forecasts for a half a percent decline. New orders took the cake, falling by 4.5% when only a 1.9% loss was expected. Initial claims for unemployment benefits in the U.S. also soared to their highest level since September of 2001, with claims rising to 493,000 for the week ending September 20th. Continuing claims rose to a little above 3.5 million for the week ending September 13th, their highest level since 2003. Initial jobless claims were expected to drop to 450,000. And taking a look at some overnight news, M3 growth in the Eurozone slowed to an annualized rate of 8.8% for August, overshooting the 9.1% figure expected. According to the ECB report, the total credit granted to Euro area residents grew 9.2% in August, up from 9.1%. Today we are joined by Dan Cook, a senior market analyst for IG Markets. Hi Dan, how are you today?
I'm doing great. How are you, Kathleen?
Oh, I'm fine. Let's jump into the questions here. The reaction after President Bush's speech last night was within minutes of the speech's end. Speculation is now that the Fed will cut interest rates at their next meeting in an effort to support the economy. What do you make of all this?
I definitely look for that as well. I think the question will be how much. A lot of people are looking for about a quarter point. I think the reaction to the speeches, as you said, they were very immediate on both sides. I think a lot of it, though, is to see what the finalization on this package is actually going to look like before any move is going to be made. A lot of the speculation is we might even see something yet today, whether it will be before President Bush's meeting this afternoon or shortly after. I think the longer that we hold out, or the longer before a decision is made, if it pushes through the weekend, it's still going to cause a lot of uncertainty in the market. And one thing that's not good is uncertainty.
Now, the uncertainty that you've mentioned, so far this morning, we've already had a lot of bad news in the U.S. as far as releases go, and we've seen the dollar go up and down against the majors after the releases. Is this just risk aversion, or do you think that people are doing more just to avoid any uncertainty?
I think a lot of it right now is just risk aversion. The uncertainty, as we've seen pretty much throughout the week, we have had a few moves a little bit here and there today. A lot of people are just in a wait-and-see type of mentality. We haven't seen the banks moving money back and forth from each other as much as what we would typically see, particularly after the moves we've seen in the last couple of weeks or month. This week, most of our currencies have just been kind of in that channel, really waiting to kind of get clarity or a focus on which direction we may head. So even with the with the news releases, as you mentioned, new home sales were really abysmal, for lack of a better term. Unemployment claims up 32,000. Even those, I think, kind of took a back seat today, and will continue to until a decision is made, one way or the other.
Now, how does all of this affect your strategy for the dollar for today's session?
For today's session, I'm really looking for it, barring any major announcements on this decision, is really still a wait and see. We're going to see probably a few moves, but for the most part, I look for it to be pretty slow market. We may see a couple of jumps here or there on a few moves, but for the most part, I'm like a lot of people out there. I'm waiting to see one direction. I'd like to see a breakout of the channels, if I could, from a technical perspective, before I'd make a move in one direction.
All right, now moving across the pond, the euro wasn't exactly spared bad releases in the overnight. The euro weakened slightly after the M3 release came out lower than expected. What is your strategy for the euro going forward?
For the euro, I'd really look for continued weakness in the euro against the dollar. there's really no good news on either side of the ocean. And so what I'm looking for is really a range-bound market, at least for the near term, maybe between 145 and 149. Breaks above or below those levels, again, it's kind of a wait and see on the decisions that are made and the impact they'll have. But because it's really who can have the best bad news, or so to speak, whose news is not going to be quite as bad as expected, it's really going to be the driving force. I look for continued slowdown with the release on the M3 monetary supply. It really gives me a good indication that this has been on a downward trend for a bit. It tells me the economy, the people, the consumers are not going to have a great deal to spend. So we're going to see that economy slow, at least for the mid to even longer term.
All right, I agree with you about that best bad news. Bad releases seem to be the name of the game today. The yen wasn't getting away with it either. Japan faced a drop in exports based on the lack of U.S. consumer spending, and they're saying Japan may face a recession into 2009. What are your thoughts on that, and what is your trading strategy going to be for the yen?
With the yen, there definitely is, from an export standpoint, slowing down a great deal. Where the United States as a nation is definitely a huge consumer of Japanese products. And with that slowdown, that's going to take a toll on their economy. Now, depending, again, and I keep going back to what we're looking at today, but that really seems to be the overall market feel, is this announcement that we're hoping to get later today, if not tomorrow. But with Japan, again, depending on that, if people and the traders themselves are deciding to become a little bit less risk-taking, they're going to want to probably move more towards the yen, which could strengthen that currency. I think over the rest of the year, again, things aren't bright and sunshiny here in the United States, so we could kind of see some yen strengthen, particularly if we start to see a lot more volatility in the markets. We could see some positive moves for strength in the yen.
All right, thanks so much for joining us, Dan.
Thank you for having me, Kathleen.
All right, this has been your New York Forex Market Buzz with Dan Cook, a senior market analyst for IG Markets. I'm Kathleen Reddington. Join us later this afternoon for PM Exchange right here on ForexTV.com.